Greece is, like all the other countries in the world, almost all the other countries, been affected by the economic slowdown. As I said before, when you have an economic slowdown, deficits increase. Some countries that had a surplus before, like Spain, have a very big deficit. Countries that had a deficit before have even a bigger deficit, and Greece is one of those countries. So it's clear that had it had a better fiscal position before, its fiscal position now would be better. But even with a 120% debt GDP ratio, if interest rates were low, as they ought to be, it would have no problem meeting its debt. And knowing that it has no problem meeting its debt, its interest rates would be low. There's been a speculative attack. The most recent news is that that speculative attack has been withdrawn for two reasons. One, Europe has been figuring out ways in which it can come to Greece. It's not a bailout in the way that our banks were bailed out, because when our banks were bailed out, they had made such bad lending that they owed more than the value, and that's why the taxpayer is going to lose a lot of money on this. This is not a bailout. This is just we sometimes call it a liquidity crisis. By providing funds to enable them to roll over the money, they'll be able to service the debt. There's no problem.
Germany will come to their aid. The EU will come.
That's right. And the second is that European policymakers are quite frankly furious. They know that Greece is at the forefront, but it's Spain.
It's not alone.
It's not alone, and they have to do something. And so there's increasing talk within Europe of imposing regulations.
As an economist, and from the reports we've seen now about the potential involvement of U.S. banks and essentially helping Greece conceal some of its debt problems, issuing credit off the books, and yet also taking positions in credit default swaps on Greece's debt, betting that it will default. How much of a role does that play in this? It's legal, but the question is it sort of the spirit of the law? Was that followed here?
Very strong concern. Our banks were very creative. They were very creative in deceptive accounting. And they used that in the United States. It's part of what got the United States into trouble. The banks knew that they didn't know their own balance sheet. They knew that they couldn't trust anybody else's. And that's why our credit markets froze. They then took this deceptive genius and marketed it around the world. And there were some countries that bought it, unfortunately. But some of the concerns are even raising deeper questions. Some of the American banks that have been advisors to governments have at the same time been engaged in short selling, attacking the countries that are paying them billions, hundreds of millions of dollars to advise them. Right. That really raises moral issues. Very much along the lines that were raised when Goldman Sachs admitted that it had sold to pension funds and others.
The housing market.
The credit, the CDOs, these securitized, and at the same time we're selling them short. What kind of firm would sell a product and say, we're not going to guarantee it, we're going to give you a negative guarantee, and not tell them, that's the point.
To be clear, also, in the issue with Greece, Goldman's not alone in this. It has other U.S. banks, and I think it comes down to the fundamental question of should it be legal?
And I think the answer is no. And it certainly raises deep moral questions. That's clear. And I think when ordinary Americans hear this, ordinary people in Europe hear these stories, they say this is really, if it's not illegal, it should be. And it raises questions about, you might say, morality. It's one of the questions I raised in my book, Free Fall. I talk about the banks not having managed risk well, not having performed their essential functions of allocating capital well, not having created an efficient payment mechanism, charging excessive fees. But at the end, one of the other criticisms was something that some people call moral depravity. They took advantage of the least informed, the poorest Americans. They engaged in predatory lending. They engaged in deceptive credit card practices, abusive credit card practices. They put poor Americans on the brink. They put themselves on the brink, and we came to the rescue. The poor Americans have not been rescued.
Thank you so much. Appreciate
Thank
it,
you.
Professor.